Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Tuesday, July 16th. Another day of small caps and Russell 2000 squeeze, and another day of NQ getting outflows. Most of the Magnificent Seven are in the red today, and we are seeing continuation to the upside in the small caps world now that more and more we are pricing in an interest rate cut in September and another maybe in November. Before moving into the charts, we are going to review today's retail sales month over month, which came 0%. Basically, as expected, 0% coming from the 0.3%. And excluding autos, we are seeing a little bit of an uptick. And year over year, we are at 2.3%, ranging in the 2.5% coming from the 2.6%, with a business inventory increasing. That means that retail sales are cooling down and inventories are going higher because basically demand is cooling down. That's what the Fed wants. Apart from that, as always, we are going to review what the earnings in the banks were. Yesterday, we got Goldman Sachs, pretty good, awesome earnings for that. And today we got Bank of America, Morgan Stanley, and Charles Schwab. And all these banks, all of them are reporting good earnings. Basically, Goldman Sachs tops estimates on better than expected fixed income traded. Remember that Goldman Sachs is one of the most interesting banks in terms of trading and basically wealth management for trading. They are not loaning as they are not getting loans and revenue from these clients. They are trading the wealth. So that strategy is basically giving them a lot of income and topping estimates. JP Morgan and Citigroup last Friday were not aligned with that strategy, and they are suffering because now that we are moving into a lower interest rate environment, these banks are going to suffer. But Goldman Sachs is not. Morgan Stanley also trading good, stronger than expected revenue and investment banking, the same strategy as Goldman Sachs, and Bank of America jumps 5%, not only 4%. We are going to see that into the charts, 5%, because basically net interest income rebound is coming. Well, I don't know about that, but it is what it is. So as I was saying, more and more analysts and markets are pricing in a September rate cut right now with 91% of probability. I agree with that. What I don't agree with is that we are going to see back-to-back 2 and 3 rate cuts this year. I don't think this is happening. But anyway, let's see what happens. We are seeing CPI inflation progressing to the downside. We are seeing data on retails and demand cooling down. Labor market is also cooling down. And Fed, yesterday, Jerome Powell gave a lot of dovish comments in the remarks. So I think Fed is starting to put a little bit of message, a little bit of narrative towards the interest rate cuts. They are coming. I saw some news that maybe in July they are going to cut. That's insane in my opinion. That's crazy. I think September is going to be the month, my opinion. So now that we review the economic data and the fundamental side of things, let's start with everyone's favorite chart. This is the Russell 2000 ETF, the IWM, and well, first gap, second gap right now, liquidity here being taken, and another huge move. Look at this, we are at March 2022 levels, pushing November 2021 levels. And I mean, in 4 days, we've been squeezing. Yes, where is that? In 4 days, we squeezed from 202 to 222, almost 10% of huge money inflows on the Russell. Banks are also doing pretty good, as I said earlier. Goldman Sachs, big 2 days. Morgan Stanley, big push to the upside. Bank of America, 5.56%. It's insane. This bank, Bank of America, has a market cap of 345 billion shares. So what is this? The shares float is 7 billion. So a move of 5% is just insane. There's a lot of money being poured into, and basically the Russell is pushing the ES to new highs. Now, ES is chopping around because tech it's basically not being able to squeeze higher. We have technical levels in the Nasdaq that I don't like to the long side. Let me first review what happened with the ES, because as you can see, there's a huge zone of rejection. 1, 2, 3, today again, but we are also doing in the ES higher lows. Meanwhile, in the Nasdaq, we are having the other kind of structure. We are doing lower highs in the 30-minute and 1-hour time frames. And since this sell-off, which marked an all-time highs and we sold off last week, we've been rejecting at these levels at 20,800. Yesterday was pretty clear of this 15-minute. Let me just show you the 15-minute rejection and then to the downside. Today, we almost did the same. We tried to push higher into London and then we dumped. So one of the things that I would like to see is what is holding and what is not. Let me just hide everything and just see the candle. This is being rejected and this is holding. We are stuck in this range, which is 700s to 500s. It's 200 points range. So unless something big happens, some buyers are trying to buy down here and some sellers are continuing selling this. But due to the fact that the buy the dip mentality is not going away and that the Russell and the small caps are pushing, there's not a clear sentiment towards the downside. Let me just review the overnight and the trade, the only trade that I took into the overnight. So we opened London and we dumped. We rejected, I marked the liquidity, we dumped lower, and then at 4 a.m. my setup inverted into a bullish fair value gap and I almost got stopped down here. I always take the same setup, entry in the first candle that taps the fair value gap, and the stop is the actual low, in this case the body of the candle that made the fair value gap to the long side. So basically a nice breakout into a push for a 1-to-3 risk reward ratio and 30 points, $600 in the overnight. And then I continued watching the price action. I was hesitant to go long at the open because I was quite bearish after what I told you earlier about the rejections in the Nasdaq. And since then, we've been just trying to break this, but we are not able. There are some trends and there are some bad day traders that follow patterns. I don't follow these patterns, but these are actually being respected. So there are big retail traders that are actually following and watching this pattern. So until we break this structure of 570, we try to go higher. We are not being able to go lower down here. And this yellow dashed line on the 30-minute chart is basically on the 15. We have this wick here. And then we have the NFP candle. So we have a confluence of a lot of things down here which are not being fully respected, but they are being followed at some point. And the NFP candle is still there. Each time that we go down, we try to go higher. We go down, we consolidate, and we try to go higher. So the only thing that I would like to see is breaking pivots and start taking liquidity. For example, this would be a break of 600s would open the high of day on 684 and would squeeze a lot of shorts in this market. But we are super weak because Google it's minus 1.22%, Nvidia is 2% in the red, Meta minus 1.60%, Apple is in the red also, Microsoft minus 1.30%. The only thing that it's holding more or less it's Amazon and Tesla, but they are not able to sustain the huge selling. In terms of other convergences and divergences, the dollar looks pretty bearish, which should push the equities market higher, but we are not seeing that. We are seeing a divergence. Why? Because the 2-year yield is being destroyed on the expectations of lower interest rates, and the 10-year it's being also pushed down, which is the long term for avoiding recession, I would say. So overall, today I'm seeing potential to the downside still. After this big candle, we have 1, 2 rejections, another red candle today, and we might open this level down here below 20,000. 20,000 would be right here, and psychological level to the downside might be possible. But we have to continue seeing the price action to see who wins the battle. There's a lot of interest in buying this dip. Let me just change to the 15. There's a lot of interest on buying this dip down here on the NFP candle. It's being protected. And also there's a lot of interest in protecting these highs after the big sell-off up here. So as I told you earlier, we are stuck in the middle. We are just bouncing on this range, and it looks more bearish than bullish, I would say. That's why I only took one trade scalp in the overnight, and we are seeing more and more continuation to the downside on lower highs. So be really careful because today looks pretty bearish, and I think resistance is to the upside, and most probable outcome is for bulls to just stop pushing and just the market to sell off. That's my expectation. I would like to see that for tomorrow or after tomorrow, towards the end of the week, to really reach what I would like to see, which is these levels below 500, below this zone to the downside, and 20,000s, low 20,000s, 100 to 200. This is the zone that I would like to buy. There's a daily push, there's a daily level here, there's a void, and then we have a 20,200, we have a daily fair value gap. So I would really like the markets to go a little bit more lower, not to just stubbornly hold because everyone is buying the dip. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. We are seeing various price action still, and into the afternoon, into the close. That's quite dangerous. The Nasdaq, the big Magnificent Seven are quite weak, and I wouldn't buy this market. Not today, maybe tomorrow, depending on how we close. But discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.